I wrote about this in my first book, Currency Wars, which came out in 2011. So that book is 10 years old at this point. But pick it up. The first two chapters were about the first ever financial war game, where I was one of the war game planners and facilitators. And then I participated in the war game, and then I wrote about it in the book. And I was on the China team. I had a friend I recruited for the Russia team. We went out to dinner and we cooked up this plan on our own. And was like, "Aren't you cheating on the game?" I said, "No, this is war. There's no cheating. It's a war." But what we said was that in our separate embassies, we had these breakout rooms. So the China team would go to a room that was like our embassy or whatever. And the other teams did likewise. But I was going to try to sell my Chinese teammates on the idea that China would buy as much gold as possible, turn its back on the dollar, and or it's just that any Chinese exports had to be paid for in gold. And my friend was going to try to do the same thing on the Russia side, and we are going to try to run the dollar off the road. And that's a little far-fetched at the time, but that's the whole idea of a war game, is to get the Pentagon thinking, at least 5 years ahead or longer. I don't want to ruin the ending, but the whole thing is in my book. But the point is, at the time we did this, we got laughed at. There were Harvard professors like, "You guys are crazy, you're foolish. Why are you talking about gold? Gold's not part of the monetary system." At that time, Russia had 600 tons. Today, they have 2,300 tons. In other words, exactly the course of conduct that we warned the Pentagon about, in that case 12 years ago, has played out. And they're doing it intentionally because they're trying to get away from the dollar. Now, it's hard to get away from the dollar. The dollar is too big. It's 60% of global reserves, 80% of most payments, 100% of energy payments. You don't just get up under the dollar just like that. But the Treasury's actions, and again, Greg, you referred earlier to unintended consequences, and I've explained this to the Treasury and got nowhere, but at least I tried. I said, look, you guys are overusing these financial sanctions. You think they're very powerful. They actually are very powerful. And that's the point. If they're that powerful and you use them that frequently, everyone's going to look for a way out of the dollar. They're like, "Hey, why am I setting myself? I trusted you guys. I got all these dollars, but you're telling me I can't spend them. I can't use them. I can't transfer them. I'm out of the SWIFT system. My account's frozen." Well, then screw it. I'll just go somewhere else. And there are other places to go. Gold is a good one, not the only one, but the fact that 21% of Russia's reserves are in gold, the fact that, by the way, it's physical bullion, they're not buying ETFs. It's stored in Russia. They're not foolish enough to leave it at the Federal Reserve Bank of New York. And Russia is a major gold producer. It produces a little under 400 tons per year just in Russia. To that extent, it's insulated from exposure to the dollar. Now, you may have to get creative at this point because the West can't seize the gold unless they want to invade Moscow. But they've said, well, yeah, if you sell the gold for dollars, we're going to freeze the dollars. Okay. Well, you can use it as collateral for loans. You can do a kind of barter. You can say to China, "Hey, send us the latest technology, and we'll pay you in gold. We'll just put it on a pallet, fly it over to China, unload it in Beijing." So there are things you can do with it, but they don't have to do anything with it. Just having it inspires confidence that they might not otherwise have. As far as the ruble, yeah, the ruble collapsed, but 50%, I think in dollar terms, maybe a little bit less. But I always say Alvira Nabiullina, who's the head of the Central Bank of Russia, is the only central banker in the world who knows her job. She raised interest rates to 20%. Well, at some point they were like, "Hey, okay, I'll stand rubles because maybe they're devaluing, but 20% interest, I'll take it." And so again, she knows what she's doing. There are plenty of workarounds in the SWIFT system. I'm kind of an expert on SWIFT because I did so much in counterterrorism and the Iran was de-SWIFted in 2012, last major country prior to Russia. But I was very involved with that, but I know how it works, but I also know the workarounds. And there are ways to do that. So Russia's going to be able to, they're not prohibited from receiving dollars for oil and natural gas. The oil and natural gas are still flowing. They've got the gold. You got to invade Moscow if you want to get it. And that's not going to happen. And there are plenty of workarounds for SWIFT. So, life will go on. It'll be inconvenient, but most of the economic cost is going to be on the West.
Why wouldn't Russia, or would they sell some of their gold to get out of this mess?
Well, the only way to freeze gold reserves, we talk about physical bullion, by the way, that they have in Russia. Apparently some of it's outside of Russia. I don't know exactly how much, but some of it it's foolish to leave your gold with the Federal Reserve or the Bank of England because that's might as well just sign it over to the exchequer. But most of it's in Russia, but some of it is not. But the only way to freeze the physical bullion in Russia is to leave it out in the cold because that's the beauty of physical bullion, which is it's not digital, it's not in some account, and you can't freeze it. Now, what they did, just to be a little bit technical, Daniela, the pending legislation says, well, yeah, we can't actually seize the gold without sending the 101st Airborne into Moscow, which of course we're not going to do. But if you sell the gold, we're going to freeze the proceeds. So it immobilizes the gold. It's actually what Goldfinger was doing in that old James Bond movie from 1964. Everyone, at least in the movie version, everyone thought Goldfinger was going to like take the gold out of Fort Knox. That was not the plan. The plan was to make it radioactive so it couldn't be used, and then that way he could corner the market. So what we're saying is, if you sell the gold, we're going to seize the proceeds, so therefore you can't sell it, therefore it's no good to you. That has some impact, but it's not exactly true, and here's why. You can put that gold on a plane, fly it to China, and unload it in a secure PLA Air Force or Air Wing base in China, and use it to pay for whatever you want. So you can't. It's either barter, or if you want to say gold is money, which is how I look at it, it's just delivering the cash in gold form.
So getting back to the point about this, Russia, China teaming up. I mean, or other countries now looking outside of the U.S. We already see it with Saudi Arabia in discussions to start using the Chinese yuan. What's the next step? Let's talk about, does this fast track the digitalization of coins coming down the road here, Jim?
Well, yeah, I mean, I point out that the dollar has been a cryptocurrency since at least 1979. That was the last year the Treasury issued a paper Treasury note, like you had a note. Maybe somebody's grandmother still has an old one in the attic, but they had little, almost like stamps, like you peel off a coupon and take it down to the bank and get paid. That last time they did that was 1979. So the dollar has been digital, and message traffic has been encrypted since around 1980. But I think in terms of the impact on the dollar, this is be careful what you wish for, and this was exactly what I was saying earlier in terms of second and third order effects. And I warned the Pentagon about this, and I warned the Treasury about this, because I know how economic sanctions work. I've been very involved in that from the point of view of the intelligence community and also advising the government. But they can be powerful, but if you use them too much and too broadly, they actually lose all their impact, because the people you're targeting say, well, okay, no mas, I'm out of the dollar system. You've done it one too many times. And this is an example of that. We've never frozen a central bank before. We have now. We've never kicked an entire country out of SWIFT, with the exception of Iran, but that's a much more isolated case. We have now with Russia.
You brought up chapters 1 and 2 from Currency Wars, where you basically highlight this scenario. You said the scenario you presented at the time was that Russia and China would accumulate large gold reserves, pool their gold, and launch a new digital currency backed by gold in the place of the US dollar. Is that the form it would take for you, something backed by gold?
Probably, and here's why. And by the way, when I wrote that, when we did the war game, and when I wrote that, Russia had about 600 tons of gold, and today they have 2,300 tons. China had about 600 tons of gold, and today they have about 2,000 tons, just slightly less, that we know of. And they may have several thousand tons off the books in the State Administration of Foreign Exchange that we don't know about, because that's completely opaque. So Russia and China did exactly what we warned the Pentagon about in 2009, exactly, which is increase their gold reserves by a factor of 4 or more. But everyone's like, well, the Chinese yuan is going to be the global reserve currency. No. It's not going to be the ruble, but here's why. Well, there are a lot of reasons, but the main reason is, when you talk about reserve currency, you have to understand what that means. It's not like the People's Bank of China has a bunch of $100 bills on pallets stacked up in the basement. When people say reserve currency, what they really mean is the currency of the bonds that they invest in. In other words, they're dollar-denominated assets in the form of treasury bonds or notes. That's what China actually has on their books. Not like dollars per se. So if you want to suggest or hypothesize that the Chinese yuan is going to replace the US dollar as a global reserve currency, where's the yuan bond market? I mean, it doesn't exist. Very small scale, very illiquid, no primary dealers, no win issue trading, no auctions, no repo, no settlement clearance, none of the plumbing and the mechanics of a mature bond market such as the United States. And above all, they don't have a rule of law. I mean, at least if somebody reneges on a treasury bond, you can sue somebody, but you can't do that in China. So the absence of the rule of law, number one, the absence of the infrastructure, the plumbing, for want of a better word, are two reasons why the yuan and certainly the ruble will not replace the dollar as a reserve currency. However, what I was hypothesizing then, and I'd come back to this, is you can create a brand new currency that does have all that stuff. And in my example, they used a Swiss bank, UK law, put the gold in a third-party depository. If you wanted some of the new currency, you could deposit your own gold and get some of the currency or trade with them or run a surplus. So it was a replacement system, but you would need the gold to instill confidence. They don't have bond markets, so they're not going to have them soon. So those the yuan and the ruble aren't going to replace anything.
In the terrifying picture you've just painted, Jim, how should we be protecting ourselves here?
Well, you want assets that are going to be immune from the global liquidity crisis. What are they? Land, real estate, gold, silver, fine art. I see Andy Warhol, Marilyn Monroe has gone. They estimate $200 million. You could have bought that for $50,000 in the 1970s. That's a little more specialized. But there are natural resources, water, etc., energy, oil. If you want to be in stocks, okay, get stocks of companies that are based on natural resources. I'm just giving these as an example, but so there are a lot of ways to protect yourself. But a regular stock portfolio is not a good one, and banks are going to be in distress. Money market funds are going to be in distress. That's what the liquidity crisis is.